Alright, we're going to do a CFTC video. And let me just get my pen. Like that. And let's take a drink of water. Okay. How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was collected on May 26, 2020. Here is a brief snapshot of the positions held by the institutions as of that date. So let's start by taking a look at gold. Here we have the data for gold, and what can we see here? Okay, so back in February they were extremely aggressive with 408,000 positions long. They took profits on those long positions, which we were expecting. And then it's pretty much been doing nothing until right here at the peak. So we see that now they're reducing again because they bumped it up from 270s to 295, now back down to 288. But when you compare it to where we have been, 270s, 279, it's not really any major profit taking. Okay, now we see an increase in shorts from 43,000 to 50,000, but there's nothing significant here. The current dynamics of the chart still suggests that we're going to see more upside. So in terms of positions giving us any type of direction, it's still very bullish. Alright, let's take a look at oil. Oil has an increase in long positions from 692 to 701. This came as price was rallying up here. So we're getting that continued push upwards that we've been expecting in oil. And we see that long exposure is at 82%, and we're still very bullish in terms of net positions, being at 542,000. So things are still looking good for a continued push to the upside. Now we have the dollar. Take a look. Longs and shorts both very cooled off. We have slight aggressiveness to the bullish side with long exposure, but we did get a decrease in net positions from 17,000 down to 14,000, and that came as price was consolidating here before the move to the downside. So nothing's really changing here. Current dynamics of the market suggest that there will be more upside to come, but in terms of positions, we're not really seeing an accumulation of any long positions at this point. Aussie, we have shorts beginning to slightly increase. We had mid 50s now to mid 60s. The shorts are aggressive, longs are cooled off, even though price is moving to the upside. Okay, we've been expecting for this area to be taken out and for a continued move to the upside. This is playing out exactly as we expected it to, and we're expecting more upside to come, and then eventually price should turn downwards. US CAD looking good. We see a slight increase in longs. This past week they took a little bit off the table, and we can see the reason for that is because they started to drop price downwards. So this is a good sign. We may get a push even lower. It's too early to tell because price can stall out here and then we can see momentum build, so we will be watching for signs of that. But bottom line is shorts are cooled off. They're not the focus of attention here. Longs were not very aggressive. They're starting to get into aggressive territory, and net positions are definitely positive. Okay, longs are also above their average size, which is a good thing, and shorts are well below. So we could see momentum start to build at any moment for price to continue to the upside. US Swiss franc. Longs are very cooled off. Shorts just a tiny bit aggressive. The bias is bearishness at this point, and net positions also suggest that as well. So we see a push lower. We may get a bounce and a push higher. But positions are not really showing us much of anything except for maybe some temporary downside is to come. With respect to the euro, we see that longs are more aggressive than shorts, but take a look at shorts. They're starting to become a little bit more aggressive here, and that is reflecting on the net positions. So we have 78,000 down to 72, now a slight bump up to 75, long exposure at 64%, and then we get the push upwards. So again, with the dollar, we do expect things to turn around and head back lower. We're not seeing that in the positions, but the chart's dynamics are suggesting that, so we're waiting for strong signs of that bearish pressure coming into the market. As for the pound, we see that longs are being increased into more aggressive territory, or shorts I should say, and net positions building from positive to negative. Okay, good momentum there, and that came after price dropped and consolidated, and then we got a slight push up. So positions are not really showing us anything, because if you look at the sentiment, it is neutral, even though bearishness is picking up. So we're waiting on the sidelines in terms of that chart. US dollar, Japanese yen, longs very cooled off. Shorts are more aggressive. We see a slight increase in short exposure, and we see that here as well, from an increase of 68% to 71% of their portfolio is geared to the short side, and used to be bullish, turning bearish. Chart, we need this to break, either down or up. We'll see which one the institutions want to push it towards. And the Kiwi, we forecasted this move to the upside. When we look at positions, we see longs are cooled off, shorts are aggressive, we don't see any big momentum, and we take a look at the sentiment. It's somewhat bearish with a touch of neutral, so it's really not a good time to be trading this chart as well. We see that there is a bearish bias, but it's nothing aggressive, it's not building, it's just kind of sitting there. So we are waiting for some signals to be produced, but in terms of the positioning, we're not seeing any very strong signs of any accumulation taking place, or frankly not even distribution. So we continue to wait to see how things unfold. Alright, that's your CFTC report for the data that was recorded on May 26, 2020. If you have any questions, you can reach us at www.whiteoakfx.com. Until next time, have yourself a great week. Take care.